There seemed to be relatively low volatility for oil prices since last week's report. In the current report, we intend to have a look at the state of the US oil market, the role of the dollar in determining oil prices, and the production outlook of OPEC under the prospect of the OPEC Plus meeting minute on June 1st. To conclude the report, we will also provide a technical analysis of WTI's daily chart. We start our analysis of the US oil market by having a look at the release of the Baker Hughes oil rig count. The release indicated that the number of active oil rigs in the US increased by 1. But it's not the increase as such that matters, it's the fact that the downwards trajectory of the number of active oil rigs over the past 4 weeks has been even temporarily interrupted. Yet on Tuesday, API reported an increase of oil inventories by 2.48 million. Furthermore, the argument for a slack in the US oil market was further enhanced as on Wednesday EIA also reported an increase of US oil inventories, albeit narrower if compared to APIs of 1,825 million barrels. Overall, currently we see the case for the demand side of the US oil market not being able to surpass production levels, thus creating a surplus of production that may weigh on the price of oil. Should there be additional signs of a slack in the US oil market, maybe even widening slack, we may see oil prices on an international level being on the retreat. Another issue we would like to address is the release of the Fed's last meeting minutes. The document showed a predisposition to keep rates high to ensure the return of the US CPI rates to the bank's 2% target. The contents of the document practically contradicted the market's expectations for earlier rate cuts and forced it to reposition itself. Despite the release seemingly being unlinked with the path of oil prices, our worries tend to focus on the idea that should financial conditions in the US economy remain tight for longer, we may see economic activity in the US manufacturing sector suffering, thus lowering oil demand and consequently oil prices. On second base, we also note that the dollar may get some support from the prolonged tight monetary conditions in the US, and a possibly stronger greenback could have an adverse effect on oil demand on an international level, as a wide amount of oil transactions are completed with payments in dollar for a number of oil importing economies, and thus oil in effect may get costlier. We make a start with our OPEC comments by noting that the group of oil-producing economies is set to meet on June 1st next week. We would not be surprised to see the group trying to tighten even further the supply side of the commodity on an international level, which may prove beneficial for the commodity's price. A possible rollover of the production cuts seems to be the most possible scenario currently, yet we would not be surprised to see OPEC announcing even deeper production cuts, which could provide asymmetric support for oil prices. Hence, up to the week leading to the meeting, should there be signals by OPEC officials or even oil market analysts trying to prepare the markets for a possible tightening of the international oil market, we may see oil prices gaining. WTI's price seems to have bounced once again on the 76.70 support line. It should be noted that the movement of the commodity's price action during today's Asian and European sessions seems to underscore the interruption of the downwards movement characterizing oil's price since the 12th of April. Hence, we switch our bearish outlook in favor of a sideways motion bias in the corridor set by the 80.25 resistance line and the 76.70 support level for the time being. On the flip side, the RSI indicator remains at relatively low levels, implying a residue of bearish sentiment among oil traders. Should the bears take over once again the direction of the price action for oil, we may see WTI's price breaking the 76.70 support line, taking aim of the 72.85 support level. For a bullish outlook, the bar is high, as we would require the commodity's price to rise, break the 80.25 resistance line, and thus pave the way for the 84.10 resistance level. Those were the top financial stories for this hour. From all of us here at IronFX, we wish you solid trading.